Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Director of Index Research and Development at Nasdaq Investment Intelligence, to discuss Nasdaq-100 technicals as we do each month to get an update on the index. Mark, performance continues to remain strong in the index, although cooling off a bit. What are you seeing from the relative strength indicators?
Thanks, Jill. Great to be with you as always. And yeah, I mean, with today being up, looks like around 1.5%. We're actually on track for another solid month here of almost 4% returns on this index. It's been a really, really solid year. And I think what people were observing when we were in June, sort of the tail end of that initial AI-driven frenzy, was that, you know, on a lot of these indicators, like the RSI here, which I'm showing, the 14-day relative strength, things were getting a little bit heated. A little bit overly bullish. You can see that green line going across there denotes an RSI level of 70. Anything above that typically is considered overly bullish sentiment and is subject to at least short-term pullback, short-term corrections. You can see where I've highlighted sort of a handful of times over the past 2 years where we've experienced that type of a jump off. There has been a corresponding dip. Usually in that blue line, the overall level of the NDX index. In this case, though, if you see what happened is we jumped over 70 sort of late May, early June, a couple times, dipped below that, then dipped back, then jumped back above. And now we've dipped back below to around a level of 60, which is actually pretty balanced in my view, given, you know, where we're sitting in terms of you know, the year-to-date gains on this index, which we're now up to well over 40%, approaching 45%. So a good sign in terms of kind of holding on to the year-to-date gains we've seen so far in a sustainable way is that RSI indicator coming down. We've not seen the really successive big days in the index continue into July, although that hasn't stopped us from notching another, as I said, solid almost 4% gain.
And let's take a look at it from the perspective of the short-term moving averages.
Yeah, so starting out here, we've got the 20-day and the 50-day moving average. Really, what's important to pick out here is that, you know, these two levels, they do act as support in the short term when you're trading above them. So you can see we've been trading well above the 50-day for quite some time now, really most of this year. That's in the red line, and then the 20-day in the gray that's above that. We've kind of been bouncing up over and then bouncing off of that on the downside a little bit. That tells you that the support is there in the short term from the 20-day. So pretty reassuring again, given that that RSI indicator has cooled off a bit. We have kind of approached that 20-day. We've bounced up off of it a couple times in the past few weeks. Pretty strong, I would say, technical short-term picture from these moving averages.
And the picture kind of looks the same for the long-term moving averages as well.
Yeah. I mean, with the long-term, you know, I think I mentioned this last time around, we were doing an update here. The pain of last year was really where the 100-day was trading below the 200-day for most of the year, indicating that kind of drawn-out negative downward momentum. We crossed back in the other direction earlier this year, right? Around sort of end of 1Q, early 2Q on the back of all that strength. We saw that red line, the 100-day cross above the 200-day. We've been trading well above the 100-day for most of this year. So that tells you that, you know, we're nowhere near sort of breaching this kind of longer term bullish channel. I think a lot of people are expecting some weakness to develop at some point later this year in the index, whether that's a function of, you know, pressure from the rates market, from inflation readings and other pressures in macro world, or even in the micro sphere of things with earnings, right? What you've seen so far this quarter, though, is a very mixed picture. We had really, really solid earnings from Google and Meta platforms. Two of the, you know, the biggest names in the index in the top 7. You had sort of a more mixed bag of earnings from Microsoft and Tesla. Of course, we're still waiting on Amazon and Apple to come next week, and then Nvidia later in August. So, you know, we're sort of about halfway, I would say, through the bulk of the most important earnings for the index, and certainly hasn't stopped the upward momentum. It's maybe slowed it down a tad bit in the sense that not all of the names are beating estimates and raising guidance to the extent that we saw earlier in the year.
And finally, Mark, let's take a look at options positioning and volatility. Certainly the volatility picture shows something completely opposite.
Yeah. So the vol Q on the right there, that's the Nasdaq-100 volatility index. And I've outlined that level of 40, which we were way above during that COVID crash at the beginning of the chart, when we shot up to almost 80. That 40 level was tested a couple times in the few years following COVID. But we've been under 30 now for more than a year. Even last year, sort of at the depths of the bear market, we very rarely got above 30. We're hovering in sort of the mid to upper teens now. Very, very low volatility, not a lot of uncertainty in the market in terms of where this index is positioned for the foreseeable future. Not as much bearish options positioning. You can see on the left-hand side, that is a broader indicator of options positioning for the entire US equity market, the CBOE equity put call ratio. Anytime you're above a 0.7 reading on that is kind of an overly bearish sentiment. And you can see we spiked to about 1.5 at year end 2022, when a lot of people were uncertain about what was going to happen this year with inflation, with rates, with the possibility of recession, with a pronounced drop in earnings potentially. All of those have kind of turned favorably in our favor, and especially for the Nasdaq-100. So the options positioning is pretty tame at this point. It's around a 0.6, kind of right around that long-term trend line. So from a technical perspective, it all looks pretty good right now. We just got to wait and observe how the rest of these earnings play out through August. And then before you know it, we're going to be in 4Q in the home stretch of what's been a really exciting year to follow this index.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.